SOFI update here on the 18th. So we had a nice bounce yesterday, today coming down a little bit. Is this the beginning of a sell-off? The only way that this is going to go down to $9, I think I said this previously, is if the market goes down, obviously. So this would have to, SPY would have to go like this. It would have to be a 333 as itself. We're in the same pattern as SPY. So depending on what SPY does is what is going to work out for SOFI. So we're like literally in the exact same spot. Made an ABC move up here. Made an ABC move up here. We have a gap down below. On SPY, we have a gap down below. The pattern that I'm actually thinking is going to work itself out more than likely is this. And then we're going to continue going higher up here. There's actually a gap at 1336 as well. So this might not be the 333 right here. It might not even be a 333 at all. It might just be that this was a double 3 A wave. And we make a, or it could be a W wave, and we make a B wave up here to 1335. 1335 is going to go equivalent to SPY going all the way up here to 582. So if SPY does this, then SOFI is going to do up here to 1336, a little bit too far there. And that could be the end of it. That could be the end of the move. That could be a B wave and we start the next move lower. Or it continues higher. That would only be a retracement of about the 0.38 fib. We could retrace all the way up here to $16 still. Where is the 1.61 fib of this area right here? It's at 1557. So basically, I think that there's probably a higher probability that we come down here, fill the gap, then run up here to 1335. And then from there, it can go one of two ways, again, down here, or we continue to go higher. Let's go ahead and take this down to the $9 mark and just see. This suggests that that would only be wave A. So all these are subwaves. So A, B, C up here to 1537. And then we fall whatever way it wants to. 5 waves is perfectly fine down here like that. So that kind of shows you where we could potentially be at. And this could be a slow retracement for the next 3 months. Instead of previously, if we would have done this, if the market does this, then the fourth wave would be done. We could get it done that quickly. It would be done. But if we do this slow retracement up here, that's probably going to take all the way until like May or June. It's going to take a long time for this to work itself out. And that's where people are going to get tripped up, because what you're going to do is people are going to be scared. Like, we're going to drop again. They're going to start selling covered calls down here. And then the market's going to slowly grind its way up here. And then they're not going to be able to sell their shares. They're going to be in these covered calls. They're going to wait for it to pull back. And then when it pulls back, it's going to go down here, which is fine. They'll make money on their covered calls, but they would have had a chance to potentially get out of some shares for a gain and then rebuy down here. So that's probably the pattern that's going to work itself out. I know previously I said this was going to happen, but it's looking more and more like the overall market is not going to fall straight down here to 530. Plus, we are pretty oversold. So I would look for that pattern. Short term, I would look for 1150 gap fill, especially if SPY comes down here tomorrow. I'd look for 1150. And then I'd be looking up here at this gap fill at 1330. Could that be the end of it? It could be the end of it too. I can't tell you 100% which one's going to be the end of it. It could be SPY goes to 580 and then it drops down here to 530. We can guess based on this. So it would probably come down, if you came up here to 580, it would probably come down here all the way to 520. It would fill this gap. Or let's just see where this would take us to fill the gap. Potentially it does a 600 test. And that would be the 0.78 fib. So it could end up being, like I just showed you on SOFI, and then we come down. Do I think that we're just going to go from here to all-time highs? No, I don't think that's basically no possibility of that happening at this point. This is a corrective move. It's just a matter of which one we go down. If for some reason the market were to fall with Powell speaking, very unlikely, okay, we'll go down and finish the fourth wave here. If we bounce to 580, then we'll finish the X wave here at 1330, and then we'll go down here. If we finish at 600, then you're probably going to go up here to 1550 and then down here to $9. So it just kind of depends on what the overall market does. But I think that I'm like 95% sure that we've started a B wave now. Previously, I suggested a 333, and I think that it's more than likely that we're just going to retrace now, which is good. I'm also seeing, when I look at the GEX, I'm looking at 1150 support. I'm not seeing anything below it. And so that also suggests that we're probably going to start bouncing here. So look for that gap fill at 1150. Look for a gap fill at 1333 soon. Pretty sure both of those are going to happen. And then from there, we'll see. Does it come straight down from there? Or do we retrace and even go higher up here to 15, 16 before we come down for this fourth wave? Again, if we zoom out here, let's go to, again, assuming that this was a third wave, this took about a year. Let's see where we're at on the retracement so far. So we did get about halfway through, down here to 1080. We did break the midpoint. So you could say it's done here, but this is not the right pattern, and the bounce is not the right pattern either. So it can come all the way out here to this parallel line and still, and that could be July, August, September, something like that. Previously I said June, but this went a lot deeper than expected. And so I would say potentially 2 or 3 months of corrective move up into here. Be careful with your covered calls, because you might want to sell some shares down here if you're wanting to reload on the next move down, because that will be a big drop. If we go to $15 and then fall all the way back down here to $9, that's a 40% drop. So do you want to be holding your shares through that whole drop, or do you want to sell and rebuy down here? So the general pattern is going to look like this, or this. And then from there, we should be going up. So it could even go lower than $9. It could go down here to, let's see, we hit 1090, I think. The 1.61 fib is sitting here at 780. So 780 would be possible after you retrace and come down here. At that point, I'd probably say it's an ABC move. A, B, and then we get a C wave higher, like that. So the summary of this video is that we are almost certainly in a corrective move now. Retracing this entire move, your typical spots that you want to retrace, or where it typically does retrace, is usually at least to the 0.5 fib. So 0.5 fib is sitting here at 1412. So this would be a little bit short, and then the max is usually around the 0.78 fib. So really, I would say 15 to 16 bucks still seems like the sweet spot for the B wave before we start that C wave down. So I'll leave it at that. That's the update for today on SOFI. Looking pretty good short term unless something happens with the Fed tomorrow. If they say something super hawkish and the market were to sell off right away, then this could be the top, but I don't see it. I would give it like a less than 5% chance. 95% chance that we are going to go to at least 1331. And between that and 15 bucks, it's kind of a coin flip, I would say. Could be right here, you go down, or it could be all the way up here and come down here to 9 bucks. So that's it. Leave me a comment, like, subscribe for more updates. I'll keep you updated. Look for potentially this 1150 gap fill tomorrow with the Fed meeting.